Hello, and welcome to the November issue of the Dairy Market Update. This month, we're looking at the key dynamics that are expected to play out in the dairy industry over the coming months. The weather has been the main driver for milk production and markets across Europe so far this year. While milk volumes in Great Britain actually held up reasonably well through the summer, this was only with farmers supporting yields by using silage and bought-in feed. For much of the summer, the UK and EU markets were concerned about where milk production might go. That concern meant that by September, butter prices in the EU were averaging more than $2,000 per tonne above Oceania prices. This price situation cannot be sustained indefinitely. Last year, we saw EU prices fall back towards Oceania levels when the Southern Hemisphere started to move towards its seasonal peak in production. A similar situation is expected this year. We still have high stocks of skimmed milk powder in intervention stores, but more than a third has now been sold. SMP prices are unlikely to move significantly until more of the EU intervention stocks are cleared. Actual milk price equivalent, or AMPI, indicates market performance through the value of turning milk into butter and SMP. In these milk equivalent terms, we see that global prices usually move in a 3-year cycle, but failed to reach a material peak in 2017. Previous peaks had been predominantly driven by SMP price increases. However, the high EU intervention stocks for SMP have prevented this from happening. This divergence in fat and protein markets has been developing for some time. Since 2000, butter has driven the overall increase in milk values, and fat in milk has been more valuable than protein since 2015. Short-term, GB farm gate prices are expected to continue to hold or rise slowly through the autumn due to the delayed relationship with market prices. However, after November, we would expect farm prices linked to market returns to come under downward pressure, following on from the weakening in commodity prices seen from early September. Farmers on aligned cost-plus contracts may see their prices increase. The markets have fallen back over recent months as the concern over milk volumes has reduced. However, the impact of the summer is still expected to play a key part in where milk production goes over the winter. Low silage stocks and rising feed costs will hit farmer margins, which historically has led to a reduction in milk yields. How much of an impact we see will depend on how far out of kilter feed and milk prices move, and how well stocked farmers find themselves for their feed requirements. Markets remain volatile, and the uncertainty of Brexit is likely to add to that volatility. At AHDB, we will continue to monitor markets as they develop. If you'd like to sign up to receive regular updates from the Market Intelligence team, please visit our website.